CEO. And Chris, what are some of the big things we're looking at?
Well, there's three key areas we're going to look at today, Tom. First of all is property. Now, we've seen just last week some recent reports that capital city prices are declining and probably at its fastest rate for a while. So certainly that's a big key area of what stocks in the residential and commercial area. Maybe, make a few comments from you, Tom, about what we're looking for, on the property side.
Well, they're diversified because you don't have any direct property exposure, so I guess that's good news. Well, the key reason that house prices are falling is because the banks have been told by the regulator, APRA, that they have to pull back on their lending. So, for example, a year ago, you could borrow a lot more money for a given level of income than you can now. Now, is that good news for first home buyers? Hard to say. Certainly we're seeing 2, 3, 4% price declines, but the big issue is clearance rates. Clearance rates have dropped from around 73, 74% this time last year to low 60s and even high 50s on a bad weekend. But again, I emphasise, in our diversified portfolios, no direct property exposure. Now, high commodity prices are another thing. I think it's going to be a big feature of the reporting season. Oil has been very strong since OPEC got its act into gear again. Iron ore has been strong. We've seen a bit of a takeover battle for one of the junior miners, Atlas Iron. It looks like Janet Reinhardt has won that. But I guess the two big exposures in our portfolio, as they are for many people, are Rio and BHP, Christian.
Yeah, so I think the good thing that we're seeing from, as a BHP or Rio or the South 32, a lot of the large mining companies, is the likely larger return of cash. So we just seen last week Rio announcing, large, increases in their dividends, which is fantastic. Certainly for long-suffering shareholders, if they've been a shareholder for a long time. But with high commodity prices, they've cut the costs out of a lot of their businesses. There's massive amounts of cash flowing through those businesses, and shareholders have been rewarded for that.
Yeah, and BHP made a colossal mistake this part of a decade ago. Put a lot of money into US shale gas and oil. Now it is selling those assets at a loss, but they're still going to get billions of dollars of cash coming back, and a lot of that's going to be distributed to shareholders. So that's what's really pushed up the BHP share price in recent times. Now, corporate activity has also been pretty strong. Just today, it's been announced that Amcor has made a bid for a US packaging company called Bemis. It's worth about almost 10 billion Australian dollars. Locally, of course, there's Aurora, ORA is the code, which is Amcor's own packaging assets that are separately listed on the Australian Stock Exchange. That's good news. We haven't seen a lot of corporate activity recently, but the fact that Amcor is prepared to go and spend up big overseas shows that they feel confident about the future. Christian, tell us about BWX.
Yeah, so BWX is a probably slightly smaller business, still worth in the $1 billion mark, but what we're starting to see with this corporate activity is different types of corporate events. So in this instance, BWX, for many people, if you own or purchase the Sukin personal skincare products, it's a business which management, both the CEO and CFO, have decided to make an offer for the business in what is more commonly known as the management buyout. So this process has now been going on now for a couple of months, and we're interested to see whether the management team, the key management team and part of the founders of BWX are able to take this business over and take it private. Hasn't played out yet. Hopefully through this reporting season we've got a bit of an update, but private equity are involved. So there's a range of different corporate events occurring, and probably the third key one at the moment, Tom, I think, which is probably closer to your world, is Fairfax and Nine.
Yeah, this is a deal that should have been done 10 or 20 years ago. I mean, the regulations wouldn't allow it. They do allow it now. Look, it's probably good for Fairfax. If Nine buys out of Fairfax, it will keep the Age and the Sydney Morning Herald and the Fin Review being printed for longer. But both companies are struggling. The real asset that Fairfax has is Domain. It also has Stan, which is a joint venture with Nine, the online streaming service. I don't think if you put two average companies together, you get a great company, but it will certainly keep the Fairfax mastheads going for longer. Well, that's all for now. Thank you for joining us. We'll talk to you again very soon.